Can you see me? Can you see the board? Can see it? All right. So this is the class you need to attend if you want to understand how to execute trades, either based on your personal analysis or based on sent trading signals. You are a beginner or you have been trading, you want to enter a trade, you need to know how to approach it step by step so that you don't make mistakes. Because whenever you make mistakes, we are losing money. So this is why we need to approach our trade entry in a systematic mode. Now, let's go to price chart here and quickly demonstrate how we can take a trade. We go to our technical software. Now, for example, a trade was sent out this morning on gold. The signal was, let's go for a long. Whenever you hear long, long means to buy. Whenever you hear short, short means to sell. Now, how many of you are in the trading signals community? Have you joined? All right, good. Now, let's say for instance, another trade signal is being sent to scalp. Now, the first thing you need to understand is for you to trade or to use trading signal, you need to know there are 4 trading methodology. We have what we call the scalper. Let's use our pen here. We have those we call the scalper. We have scalp, those who scalp. We have the next trader who is the day trader. Those who day trade. Day trader. Next, we have those who are swing traders. Those who swing trade. Finally, we have the investors, long-term traders, who are position trader. Now, these are the 4 trading methodology, although some are high frequency trading, or some traders involved in high frequency trading, which can still be placed above the scalper. So majorly, these traders use advanced or high intelligence computers. But right here, let's do it manually, starting from scalp to position. Now, once a trading signal is being sent out in our community, the usual way we do is we first tell you the trading methodology, which means which of these 4 principles we want to apply to take a trade. The gold trading signals that was sent out this morning was focused on scalping. Now, as a scalper, your time frame of entry start from 5 minutes or 15 minutes. You don't go more than those 2 time frames. It's either you enter on the 5 or the 15 minutes, while some may go to 1 minute. That is high frequency trading. Now, 5 minutes, within 15 minutes, that is the bracket. Minutes. Now, for the day trader, if a trade is being sent out and you see day trading, it means such trader can execute his or her trade within the 15 minutes to max of 1 hour. 15 minutes. All right. Now, when we talk about the swing trader, this type of trader can execute their trade ranging from the 1 hour to 4 hour. And when we talk about the position trader, they can go from 4 hour to the day chart for their entry. Now, in a situation whereby a trading signal is being sent out, if you are a scalper, you go to the 5-minute and 15-minute chart to look out for the reason why a trade signal is being sent out. But before that, check the time at which the trade was being sent. Now, at the bottom of those trading signals parameters, you would tend to see the time. Maybe the trading signal was sent around 4 p.m., 3 p.m., 3:30 p.m. You will see under the parameters sent, the time will be there. Now, let's say, for instance, the trade was being sent by 1 p.m. and you are not on your chart during that time when that trade was being sent. First thing you have to do is check the parameters. Is it a scalper or day trader or swing or position trading signal? Once you verify it, then you check the time. Check the time related to your present time at the moment, your present time. Now, let's say, for instance, this trading signal was sent by 1 p.m. and when you were able to get to your chart, or when you get to your chart, the time is now 1:30 p.m. You know, that is a 30 minutes difference, or maybe even 2 p.m. That is 1 hour. For a scalper, there's a higher possibility you have missed that trade. Now, how can you know if you have missed that trade or you haven't missed that trade? That is the next step you have to check. That means you go back to the chart and check the time the trade was being sent. The times are always right there at the bottom. Then you relate it to the time you are current, your current time. Let's say, for instance, the trade was being sent at 1 p.m. and now on your chart, you are at 2 p.m. Now, what you need to do is check that 1 p.m., check the candlestick, which was being used for either buy or sell. Now, you go back to your trading signal parameters. The next thing you have to look out for is the trade entry zone. Entry, where the signal provider said you should enter for buy or for sell. Now, let's say, for instance, the signal provider said, let's clear this off and put on our chart on reactive mode. Now, let's say, for instance, a trade was being sent out during this candlestick right here, which is 12 p.m. This is 12 p.m. right here at the bottom. And you open your chart, you see time is at 1 p.m. You know, you are 1 hour behind. Now, the next thing to do is you want to check where the trader said you should either buy or sell, which is the price level. Let's say, for instance, the trader said buy gold at 4,420. Now, what you want to do is you want to pick your horizontal line tool. You pick your horizontal line tool, then you move it on that 4,420 to see the current price level of the market. Maybe it's still at that range, or how far it is away from that price level, which the signal provider said you should go for either buy or sell. Now, you place your rate tools at 4,420. You can see 4,420. 4,420. Now, this is 1 p.m. and the trade was centered at 12 p.m. Now, you are currently at 1 p.m. Now, you go to your chart, you can see that currently now, okay, the market is at 1 p.m. The trader said enter as 4,020. And at 1 p.m., the market is at a different level. Now, in fact, let's check what is going on currently in the market. Let's say, for instance, the trading signal was sent out at 12 p.m. to buy at 4,420 on gold. Now, the market is trading at 4,426. You can see the difference from this entry and this place is not too far. You can still make your entry. It's still within the zone. Now, let's say, for instance, the market has moved from 4,420 to like 4,430 or 440. The market has moved too far. But you cannot conclude yet based on that movement. The next thing is to now check the stop loss of that trade. Where does the trader or the signal provider say you should put your stop loss if the market doesn't work as planned? Now, your stop loss and your take profit will determine if you are totally late or not. Now, what you need to do is if the trader, based on the concept we teach you right here in our academy, ChartsEmpire Trading Academy, we said on each trade setup or trading signal you receive, you should have the tendency to make at least 2 times as take profit than your stop loss, which means if your stop loss is $100, your take profit minimum value should be $200 or above. If you are not doing that, then you are not trading. You are not trading. Are we seeing on record? Check the camera. Thank you. So, now, the market is at 4,430. The signal provider said we should enter at 4,420. We are 10 movements away, 10 points away. Okay. Now, our stop loss and our take profit will let us know if we are late or we are not yet late. Now, we go to the trade again. We check out, we take our risk to reward ratio, which is right here. And this is why I do advise you, trader. If you are a serious trader, if you are yet to understand how to use TradingView, my brother, my sister, you are not yet trading. If you don't know how to use TradingView, I don't know what you are doing as a trader. I don't know what you are trading. It is a sophisticated trading platform. As a trader, you need this tool to make your trading become more easy. So our stop loss, we have to find our stop loss out. Where does the trader say we should get out? Now, the trader said we should make our entry, we should get in at 4,420. The market is at 4,430. Now, where is our stop loss? If the trader said, okay, we are putting our stop loss as 4,400. Now, we take our risk to reward ratio 2 for long. The risk to reward ratio 2 you use for long, that is for buy, is different from the one you use for sell, which is short. This one is the long and this one is the short. And how can you know it? If you study properly the diagram of your risk to reward ratio tools on your TradingView, you will see that the one for the long, the horizontal line and the two horizontal line will be closer than the third horizontal line, which will be above. That means your stop loss should be lesser, your take profit should be wider. This for long to go up. And for the short, your horizontal line at the top will be closer and the TP line will be far away. This for short. Now this is what you look out for right here and here. Exactly. So now we want to use our long risk to reward ratio setup because the trader said we should buy. Now we put our risk to reward ratio setup here at the current price in the market. And we put our stop loss at this level the price the trader said, or you or the signal provider said we should place our stop loss. So if we were to put our stop loss at 4,400, now the TP is the next factor to let us know if we are late or if not. And how can we know if we are late? How can we know if we are late? You can only know you are late if your TP level is not giving you a minimum of 2 risks to reward ratio on this reward ratio level here, indication here. So now let's say, for instance, the signal provider said target 4,490 as your TP or as your TP1. You all know the minimum TP should be 2 times our risk. Now, all you have to do is raise this up to 4,490 and then check what we have right here. What do we have right here, class? 2.24. 2.24. We still have enough room more than 2 risk to reward ratio. That means you are not yet late into this trade. You can still take your trade. Now, let's say, for instance, the trade has gone to like 4,440. Traders, what do we have right here? 1.25. That means you are late. And these are not only the factors you use to make your trade. When a signal provider said take a trade, buy or sell, you still need to understand why he or she said you should buy or you should sell, even though you are not yet how can I put it? You don't have much knowledge. You are not yet armed with more knowledge. There are some factors you should be able to pin out. Your final signal of entry is your candlestick pattern. Based on the concept we taught you in the class when you started your trading career right here at ChartsEmpire Trading Academy, we showed you some series of candlestick pattern which acts as the final decision maker. Can you see a buy candlestick right here? Can you see a buy candlestick right here? What is the name? Can someone tell me? Thank you. We have a bullish pin bar here. We have a bullish pin bar here. So this bullish pin bar is still a signal that buy is still active. So if you are a scalper, you can check out this trade and take it. It's still confirmed right there for scalp. So that is it. Now you are not yet done. Now, how can you determine how much to risk and how much to profit? To determine how much to profit or how much to risk, you need to know your account balance. Your account balance will now be related to your risk appetite. As a rule of thumb, I will advise you as a beginner trader, don't risk more than maximum of 3% on your trading account. Some traders will tell you, oh, no high risk, no high reward. It's only applicable for someone who knows what he or she is doing and who already have a working strategy, a proven strategy in place. Not for you as a beginner still trying to get it right. So 3%, if you have a $1,000 and your 3% should be what? $30. Now, how can you know the position size to risk? So that when it hits your stop loss, it gives you $30. Now, this is where the risk calculator tool comes into play. We've shown you how to use it. We've given you the links, and I will demonstrate here again. So, how can we use the risk reward calculator tool to analyze our risk in the market? It's so simple. It's just a matter of punching some figures, like the way you punch your calculator to calculate figures. Of course, it's a calculator. Now, let's see how we can calculate our risk as a trader in the financial market. Before you take a trade, you need to know how much you are willing to risk. And such risks should not be greater than your risk appetite. You don't just guess. You need to be assured how much you are risking. To calculate your risk, there's a website you go. Let's clear this out. I sent you the website link in our online class yesterday. All right, have you practiced it? Now, this website right here, risk calculator, if you are yet to get the link, message us. Our support will get it over to you. If you are watching online, comment risk calculator and I will send you the link. Now you click on this tool right here, and automatically, once you are on the website, you will see the calculator on your screen. Now, what do we need to do with this calculator? What do we need to do? With this calculator, first thing we need to know the instrument we want to trade. The instrument you want to trade determines as number one factor. On this chart right here, we want to trade gold. The symbol is XAU paired against USD. So we navigate back to that calculator and then we input XAU paired against USD. If it's not there, you search it through the search box. Happy New Year, mommy. Ekabama. Have you gotten it? Good. So, as I was saying, let's say for instance you don't know or you haven't traded gold and you want to search it for the first time. XAU USD, that is the symbol. Or you search gold, you see it right there. You click it and then that is the instrument. Open price, that is the entry price the signal provider said you should enter. What is our open price based on what we were discussing earlier on gold? 4,420. Now let's input it right here. 4,420, 4,420. That is your entry, or you call it open price. What is the stop loss? 4,400, 4,400, 4,400. That is the stop loss price. Now, what is our account balance? Should we put $5 million, $1 million? Okay, let's put $1,000. $1,000 is okay, right? Or $10,000. $1,000. Okay. Your account balance will be right here as $1,000. $1,000. Oh, I mistakenly pressed 10,000. I like big money. 1,000. 1, 1, 2, 3. $1,000 is our account balance. Now, how much should we risk on this $1,000? $50. That is 5%. Okay. If you have the risk appetite, good. Now you input that amount of money you are willing to risk right here as $50. And this is where majority of those who created a Naira account will have issue. Because right here, see that you calculate your risk in dollar, pounds, or euro. So if you open Naira, you open Ghana cedis, you open any other exotic currency pairs base account, you are in trouble right here. So your base account should be in dollar. Once you use our recommended broker, you click on USD when you are opening your account so that you can select USD to be easier for you to calculate your risk. So $50. Then you scroll all the way, you scroll this level up. Before you calculate, you have to click on calculate lot size in MT4 or MT5. Why is that so? You need to do that because the standard unit of measurement on gold is different from forex. Who can tell me the standard unit for one lot size in forex? I told you in the last class, the standard unit size for one lot in forex, 100,000 units is one lot. So in gold, it is 100 units. But in forex, it is 100,000. It means gold is more heavier. Now we calculate lot size, contract size of gold. Unit per lot is 100. You need 100 contract size to make one lot in gold. But in forex, you need 100,000 units. That means a work that 100,000 people can do, gold needs just 100 strong men to get it done. So it means gold is heavier, stronger. That is why I advise you, if you want to trade gold, if you don't have a substantial amount of money in your account, don't go near gold. Because it is bigger than the forex you trade times 1,000. Now you click on calculate. You can see, for you to risk $50 based on this stop loss, that means you need to take 0.025. If you are not running a nano account, or if your broker doesn't provide you with nano account, if the minimum standard unit size on your broker is mini, then that means you have to take 0.02. So you can see that. So now you go back to your chart. Ask your question, please. Ask your question. Ask your question.
Lot size.
Lot trade size. This is lot trade size. This is unit. This is the one you use. Oh, this is the one you use. Oh, don't go and put 2.5. Oh, this is lot. Check. Lot. This is trade size. This is lot trade size. Don't use this one. No, this is the one you use. So the first one here is the one you use. So if you go and use this one, supporting law, account is gone. Only if you have big money. Oh, hey. So that is it. So this is how you use our trading signals. So you go back to your chart, you input it, stop loss 4,400, lose $50. If you are making times 2, that is $100. So this is what majority of traders who are in the trading signals community don't know, and that is why they complain they lose money. Because if you are not managing your risk, trading is about risk management. In the next class, I will show you how to input your lot size on Metatrader. It's so simple. Do you have Metatrader on this computer? Okay, let's go right there. Let's quickly demonstrate how to use our Metatrader. Is it on the OS or on the Android? On the Android. But you guys can download this on the OS instead of the Android. Let's go to the Android. So if you have any question, if you are in this class, if you are watching us from online, you can ask your question. ChartsEmpire Trading Academy Limited. So we offer tutorial in the forex, crypto, stocks, commodity, and index market. We also have free trading signals community. Check the links in the description of this video to join us. Now, this is your Metatrader. I believe by now you have installed your Metatrader. Have you done that? Now you want to take a trade. You are going to see some blue and some red. Sometimes it change to red, sometimes it change to blue. These are your buy and they'll sell. You will see it on the tag. Oga, look forward. See the buy here. See the sell here. This is AUD/USD, the currency you want to either buy or sell. Now, the lot size you want to trade, this is where you input it. Let's say, for instance, you have decided your risk and you want to trade it. This is one lot, so because there's no any decimal there. If you are taking one lot in forex, that is, you are executing 100,000 unit size. If you want to execute macro, which is 10,000 units, that will be 0.1. 0.1 is the same thing as 0.10. We understand that. If you want to take maybe 0.2, you type it. If it's 1.5, you put your 5. You can see the 0 is showing red. Means you cannot execute a 0. It must be a figure. So the minimum you can go right here on this broker is 0.001, which is the mini. Some broker can allow you to go to 0.001, which is nano. But this broker doesn't offer that. Let's try it out. Impossible. It is impossible because it's showing us red. So let's say, for instance, you have calculated on risk based on what we calculated on gold, and we are looking out to trade 0.02. What are we going to do? You input it right here. But see, this is AUD/USD. So we cannot trade in AUD/USD. What do? You click right here to search for your currency pairs or the asset. This is gold. You click gold. Now, our risk to reward ratio told us we need to do what? Input 0.02. So we come right here. We now input 0.02. Actually, we don't know the account balance right here. You can check it. Then click $5,000. Okay, $5,000 on this account. Then click on, if I'm not going to waste your money, then click on buy. That is all. Once you click on buy, you can see this is the buy. You're heading in. So now what do? You click on this, then you drag your stop loss. But if you are not using the Metatrader 5, you can't do this. Under normal professional mode of operating or executing your trade, the first thing you should set is your stop loss. But at times, you may want to enter on time, then set your stop loss later. Make sure you don't forget. As a disciplined trader, the first thing is set your stop loss, your TP, before you enter. But Metatrader 5 has made it more easier, convenient for you. So don't abuse that comfortability. Now, once you made your entry, click on this, your entry dotted horizontal lines. Then, if you are buying, you have to shift your stop loss down and your take profit above. If you are selling, where will your stop loss be? Above, your TP will be down. Now, since we've executed our lot size, what do we have to do? We click on this entry dotted line showing us we have made an entry. Now, what we need to do is to drag. We click on stop loss here. Once you click on this dotted line, it shows you to close the position, to stop, to set your stop loss, or to set your take profit. Now you have to click the one you want to do. Go to set our stop loss. Stop loss, we click on stop loss. You can see the line of stop loss. Then you drag it to 4,400. You can see that? Now, 4,400 is showing us what here? Minus 47,000. No, minus $47. Remember, we wanted to risk $50. Can someone tell me why we are risking lesser than $50? We are risking lesser than $50 because the market is now below the entry point given. So which means at times when you miss a trade, you can have the opportunity to get in at a better price offer than the signal provider.
Many nano price 5 instead of 0.025.
0.025. That 5 you can't put it. So instead of just using 0.02, you can now approximate it to be 0.03 because you are now having enough lesser risk. So now you can see, if you now click this blue arrow to activate it, because at times when you drag this down, when you don't activate it, you haven't put the system in place. You need to activate it by pressing this blue button. When you press this blue button, then it will be activated. See, now click on modify. You can see, you hear the sound? Modify, this is your stop loss. When you click on this right there, you will see the amount you are risking, which is $47.24. Now we are not yet done. There are some traders, they don't use take profits. They either use their stop loss to ride the trend, which means as the market keeps on going up, they move the stop loss and keep on riding to secure profit until the market retrace and hit their stop loss, which has turned into trading profit. In the next classes, we discuss more about how you can turn your stop loss to your trailing profit to ride the trend without having a take profit. These are majorly for trend riders. There are some traders, they don't use take profit. They are called trend riders. They ride the trend until the trend says, I am over, or the journey has come to an end. It only takes a nimble, a patient trader to do this. Not an emotionally attached trader whose thought is always about how to pay school fees, pay rent, buy food in the house, or okay. So our final process is what? Set our TP. We click on the green TP, then we drag our TP. Our TP will always be above because we are buying. Then you go to the level the trader is saying you should set your TP. Our TP should be how much here? Based on the principles I told you, $100 minimum. So we drag all the way up. And see, this is around $100 here. Now let's drag it up. Then we modify. Please don't forget, because there's some trader once you just click it, you just leave it like that. Metatrader is not yet modified to do that. You have to modify it here. When you modify, you hear the sound only if you've put off the sound. So today's class, we were able to cover how to apply trading signals, how to check the entry levels in reference with the parameters which the signal provider sent to us or based on what we did personally or manually, and then how we can calculate our risk before coming to our live chart to execute the trade to ensure that there is no mistake and you follow the normal trading or risk rules principle in trading. So I believe by now you now know how to set your stop loss and your take profit. If you are yet to still have more knowledge about it, please you can rewatch this video as much as you like. All right. Of course, I'll get this video right. So guys, I'll see you in the next one. You have questions? Any question? Ask your question.
Take profit and stop loss. Which one is more easier? Is it to be dragging or is just put it before you press buy or sell? That's from where you put the lot size.
I told you, I said, I told you that if you were listening to me in the class, I said, Metatrader 5 has made it easier. Once you know the amount you want to risk, press it here, buy, click buy or click sell. Once you click that, don't forget to drag your stop loss and your TP. If you are not using Metatrader 5, if you are using the 4, then you have to click on trade execution tool. You come right here, click on this plus icon here. Now this is the table you were asking for. You input your entry, set that stop loss the trader said you should put or you wish to put. The stop loss is still what? 4,400. You click here, 4,400. Your TP is around 4,490. Your TP is 4,490. Then you click on, before you click on buy, check your parameters very well. And again, market execution means you are okay with the current market price in the going on. So you click on buy market. When you click on buy, I'm not wasting money. You can see. So now my question is, out of the two ways to execute trade, which one is more faster and more convenient? The first one, put your position before you start looking for typing figure. If it's in a fast market environment, it would have gone. Remember, we are a scalper. You have to think how to do it faster and smarter. If you are a day trader or swing trader, you can use this manual product way. But if you are a disciplined trader and you want to be disciplined, or if you are a forgetful person, please use this second method, because you may end up clicking buy and you see the market is giving you profit and you end up forgetting you haven't set your stop loss. So if you are a forgetful individual or you want to maintain that act of discipline, you can use the manual method, which is the regular MT4 method.
Now, what if you have what you want? How do you now
To close your trade, check right here. You see the trade. Click on it. These are all the trades going on. Look at all the profits. Everything right here. Minus $7. We are currently in profit of this. So you want to close the trade. You click on this. When you click on it, a pop-up will turn up. Let me do that again. Look at our gold we are buying. Let's say for example we want to get out. Click on this. It tells you to close. Modify means you can shift your take profit. You can shift your stop loss, but you cannot shift your entry. Once you make your entry, that is final. Only if the entry is a pending order. So if you want to close, click on close. You close it. You want to close, click on it, click on close. Now you accept you are ready to close, just like you accept to modify. Now it shows you the amount you are gaining as profit or loss. On this trade, we are having a $8 loss. So if you are okay with it, then you say, yes, I'm okay, get me out. Exactly. Any more question? Happy New Year. All right, thank you. See you in the next one.